Hey everybody, welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, crazy market, you could say blood in the streets, folks. We've seen a massive reversal in the markets after yesterday's, or I should say Friday's rally. We are now below those lows from Friday that were a gap down before the rally. Bitcoin, which had the huge move up yesterday, coming right back in, crashing to the downside, still over that 73,000 technical support. So again, there's a lot to discuss, but let's get right into it right here, folks, as we take a look. All right, so if we take a look right here, we have massive sell action. The biggest outlier here is the NASDAQ, down 3.14%. This is a huge drop in one single day, especially when it looked like things were going to calm down on Friday. Not so fast. Now, what's the culprit here? Honestly, it's probably tariffs, right? Everyone was hoping and praying that the tariffs would be pushed off again like last month. I think that's why we started the day flat to positive. That doesn't look to be the case, at least not fully, and the markets are now panicking, right? You have panicking exiting going on here across the board. Dow down almost 700 points. The S&P is down almost 2% or 110 points. Oil taking a beating here. Gold is rallying as a safe haven asset. That makes sense. And Bitcoin, look at this, down almost 10% on Bitcoin, right back to 85,000 after getting, I think, as high as 94,000 yesterday on the day on the back of that Trump tweet about a strategic reserve. All right. Let's go to the charts here. What do we have? So this is the big chart that we've been watching, folks, right? So we have this upsloping trend, right? And that's the key. These two lines make a trend. It is very clearly an uptrend. The problem is this. Friday, we got back above the line after closing Thursday below. Again, that's okay, because we didn't confirm to the downside. Now today, same thing. You're not going to confirm. You can't confirm a breakdown today. But just the mere aspect and what does it do psychologically to investors to have that market get rescued on Friday and then get smoked today, it does major technical damage and major psychological damage. And that, to me, whether we bounce again tomorrow or not, chances are we are going lower and we will likely confirm, whether it be tomorrow or on Wednesday. All right, so again, some big things going on here as we go. All right, so next up, let's take a look at the QQQ. We know the Qs, the NASDAQ 100 here. This was already confirmed below this level here. We came down to this little pivot low. You got a nice little bounce, but look at that, right back down it goes. Now, the biggest culprit here is NVDA, folks, down 8.75 points on the day. Huge drop on NVIDIA here. And again, the biggest thing, let's walk back to the big board here and take a look. The biggest thing for NVIDIA now is the fact that we are looking at a breakdown here that has chance of confirming tomorrow. So we can see, again, this low pivot right here, right here, right here, and right here. There it is. It closed on the line on Friday, or on Thursday. We bounced up on Friday and now going below. And again, it opens the door to confirming a major breakdown. And listen, you're talking about a stock that basically is $3 trillion. In fact, a month or two ago, it was basically $3.5 trillion in market cap. To see a stock like this down as much as 10% today, which is what it was at the lows before this end of day bounce, that's massive. And that, again, think about people and the wealth effect. So we talk about, is a recession coming? Is a recession not coming? Well, the reason why a recession hasn't come, in my humble opinion, is because the wealth effect. So when people would look at their statements and be like, oh, my 401k is up another 5% this month. Let me go out to dinner. Let me go shopping. Let me do all these things. Well, now it's the reverse. And this is the problem. And this is why a recession will inevitably come when the markets start to decline like they already starting to do. People start looking at those statements and they say, uh-oh, inflation's up, and I'm seeing my portfolio go down. That's problematic, all right? So again, NVIDIA, we're going to watch tomorrow to see if this breaks down. Let's go back to the main screen here and take a look. SMCI, look at the drop on SMCI here, down to $36. Now, actually, this one to me is a buy, and I picked it up in my service today, Smart Money Stocks and ETFs, and I'll show you why. So look at this trend line here. Beautiful downsloping trend line. You had your breakout here. You could even make a case shoulder, head, and shoulder, so an inverse head and shoulder. And then what do we call this? We call this a retrace to the scene of the crime. There's also a gap fill right here. So you have two trend lines coordinating and basically dissecting right here with price coming into it. we should, and I say should because listen, if we're in the full collapse mode, nothing could stop it, but we should, probability-wise, see some sort of bounce back. Again, how high, I don't know, maybe back to 40, maybe back to 43, but either way, I would expect a short-term bounce on SMCI off of this. And by the way, folks, this is a huge drop. I mean, if we just look at this was trading at $66, 46% drop in basically a week and a half on SMCI. That is incredible. Just in case it goes lower, you always want to have a backup plan. What happens? Where do I add to this position? Right here, folks. See this level right here? Pivot low to pivot low. This is how I make decisions, not because of a whim or emotion. I say, okay, technically this is a support. Let's give it a shot here. If it goes here, I'm going to dollar cost average and look for a bounce off this level. Those would be my two levels. Level 1 hit today, level 2 tomorrow. Semiconductors overall, look at this nasty breakdown. So same thing, we could be on the verge of confirming a longer trend breakdown on the SMH, nasty right there. And lastly, I just want to bring this to your attention. This is a chart I'm keeping a close eye on, AMD, for a potential swing trade long. Look at this here. Look at this trend line downsloping and this upsloping one right here. Look at how they're coming together right around 90 bucks, give or take. So it's starting to get a little interesting. But isn't it amazing how early in 2024 and through most of 2024, we saw these stocks just be so powerful. They really took this market and just ran it up and continued to make new all-time highs. Now a lot of them are in collapse mode and way off their highs. All right, we got to get into Bitcoin here. Let's take a look at Bitcoin. Look at this nasty reversal today. I'm going to go to the big board to kind of dissect this here. So let's take a look. So if we look at Bitcoin, number one, we knew we had broken down from the 92,000 level, which was right here, right? Okay, so that was number one. Let's walk it through on a technical basis. No emotion, no nonsense. Let's just think about the chart. It closed below and it confirmed. So now you have a confirmed breakdown below 92,000 on Bitcoin. What does it mean? It means that unless it confirms back to the upside, it doesn't matter. It's still a breakdown and you short into resistance. So what did I do yesterday with members in my Smart Money crypto service? We shorted Bitcoin just above 93,000 right there. Notice again the two trend lines converging right there. All right, the idea being is this should pull back. Now, did I think it was going to reverse the entire move today? I had no idea about that. I just thought overall it would start to come back in off of that level. Now, this again is very, very bearish. Regardless of emotion, take emotion out of it, just think about it logically. You had this great news yesterday for crypto, a strategic reserve with Bitcoin and Cardano and Ripple and all these others, right, XRP, and then all of a sudden in one day, the entire move is negated. Is that bullish or bearish? The answer is bearish. Psychologically, it messes with bulls' heads, and that's the problem. So doesn't mean you can't bounce. Wouldn't surprise me to bounce up, but eventually I still have the bias based on chart analysis that we are going lower. Where to? 75, 73,000 would be the first level. Not to say that's where it ends. That's the first level of technical support. Last week, late last week right here, we hit about 78,000. So we actually kind of came close to it. But again, in general, eventually we should make our way down there. Then we have to watch, does that level hold on a technical basis? All right. A couple other charts today. Number one, gold reversing or pushing back up nicely here, folks. As I'm just looking here, bear with me as I get up the correct chart that I want to show you guys here. Oh, we're just on stocks here. There we go. So there we go. So here's a good gain on gold. Gold had been down a few days in a row. Now a safe haven. It's pulled off of the highs. People rushing back in. Nothing new to dissect here. I still favor some downside into this level right here around 27.90. And then we go to the this chart on silver, and silver actually got a little bit of a bounce today too, which is nice to see. Maybe behaving a little bit like a safe haven as well. Even natural gas caught a bid today, but oil did not. All right, overall, quickly looking at oil here. Then we'll look at Okta. Okta, again, has earnings after the bell today. Again, you could see oil trading lower today. Support is still 66, so unless it gets to 66, there's nothing for us to do here. And lastly, look at that pop on natural gas today, up 8.6% on the day. The key is to understand the technicals. This is your resistance level until proven otherwise. So again, it is a sell unless it takes out and confirms above 440 on natural gas. Let's quickly go to Okta here in the after hours and see if there's anything. Yeah, it is popping here, folks. So again, I can just see the after hours. Look at that nice pop. Now again, is this company big enough to kind of negate the negativity? It probably isn't. We're going to need something positive on tariffs out there. But either way, that is a big pop, $10 over 10% bounce on Okta here. If we look at technical levels, the 100 even number right up here would be your first level. A Pierce of 100, you can see this high right here. That should be your first level around 100.5. And then if it trades through that, 104 would be the next level of resistance. So I know the guys are on Earnings Trader. They're trading this in the after hours. Feel free to join Smart Money Stocks and ETFs to get access to the Earnings Trader and day trade these things live with us in the after hours. But really quite something today, folks. So I think the essence of today's action is that markets, again, the downside move today, negating that move up, is very, very bearish. We haven't confirmed on the S&P, but we're watching for that. NVIDIA might confirm. If things confirm tomorrow, it opens a whole new can of worms for downside. And we were just discussing this in the live trading room, is that markets are only down about 5%, 6% off their all-time highs. This isn't even a blip on the screen of a correction. So if you're looking at this market and you're like, oh my goodness, I will caution you. I traded through 2008, 2009. I traded through COVID. I traded through the dot-com bubble. This is a child's play type action, even as crazy it is. It's just we've been conditioned to always assume it's just going to bounce right back up. Be careful, folks. If time is up, truly, there's a lot of downside to be had. But again, at the same time, if you're a swing trader, there's a lot of bounces along the way. You guys have a great one. I'll talk to you tomorrow in the game plan.